The XY Advisor podcast is intended for professional financial advisors. All discussion is limited to publicly available information and should not be interpreted as legal, professional, or financial advice. XY Advisor does not hold an AFS license nor provide any financial services. Before making investment decisions, you should obtain financial advice from a qualified financial advisor.
Ben Nash here. I'm a co-founder at XY Advisor and founder of financial advice business Pivot Wealth. My business baby I started from scratch a bit over 6 years ago. In that time, I've leveraged some of the learnings of the XY community to scale the business and become one of the better known financial advice businesses for high income accumulators. You can join me each Tuesday as I have the privilege of interviewing some amazing people where I'll selfishly be able to continue my personal journey to improve every aspect of my advice process, and hopefully you can learn a few things on the journey as well. Jump over to xyadvisor.com if you haven't signed up already to share and learn from other advisors, or simply download the app.
Advice Intelligence is the market leader in goals-based advice technology. Offering clients an end-to-end financial planning software solution, AI unleashes the true power of advice by providing a new world of advice software to enable planners to work smarter, not harder. Delivering financial advice in a way that's inspiring, cost-effective, and scalable. AI makes it easy for advisors to have enriched and engaged conversations with clients so they can solve their problems and explore future possibilities together.
Hey guys, Ben Nash from the XY Advisor team, and today I'm here with James Baird. James is a director and principal advisor at JustInvest based out of Dunsborough in WA. James, thanks for joining us, mate.
Thanks for having me, Ben.
Mate, you've been at it for a while, so I'm keen to pick up some of those, the things that you've learned along the way. I thought maybe a good place to start would be if you could talk us through your journey in advice and how you've ended up where you are today.
Yeah, I started as a BDM in the year 2000. It seems like a long time ago now. And went overseas for a couple of years to the UK and came back and worked as a BDM for Asgard for another few years before I joined our family business, which myself and my wife bought off her father, which had actually been going for a very long time, had been operating since 1967, started as a risk insurance business and then developed into superannuation investment over time. So myself and my wife effectively stepped into a business that was well established, quite mature, had a bit of everything really, had everything: corporate super, self-managed super, insurance, investment, and so on. And it was a really good training ground to come into the industry.
Yeah, no doubt. And I think that, ultimately relationship game, BDM stuff, all down the same path. But obviously a pretty different game running your own business essentially. Like how was that transition for you?
I think as a BDM, I was always really interested in best practice and trying to help advisors with that. And so you'd be on the road, you see what practices are implementing things successfully, and I guess you're sharing some of those ideas. And so I always had that sort of, I guess, consultant sort of mindset. And I think with our business, you could see it wasn't perfect, but you're not going to change it overnight. So it was all about incremental improvements. And I think we still see ourselves as being on that journey.
Mate, it never stops. It never stops. That's for sure. And that's one of the things that I loved about advice when I first started as a bright-eyed, bushy-tailed graduate, that there's legislation's changing all the time, clients changing all the time, markets changing all the time. And then you overlay that business conditions, technology, and all of those sorts of things. It means that there's always something to keep us occupied. I imagine that coming into a business that had been going for such a long time meant that there was probably a whole bunch of things that, or ideas that you had, or things that you wanted to sort of tweak or refine. How did you tackle things in the early days in making that transition and figuring out what you would focus on and what would move the dial most?
I think there's a couple of things. One of the things was that we started implementing fee for service, flat fee arrangements for clients. It must have been about 15 years ago. I'm not sure the exact date, because we could sort of see that these trail commissions and all these volume bonuses. I guess there was a range of things in the industry that I was sitting back saying, I don't think these things are going to be in place forever. I don't think it's equitable and transparent. And sure enough, it took a Royal Commission and a whole lot of regulation changes, but so many of those things that were intrinsic in every advice business that had been around for decades, it was all cracked open and ripped apart and had to be rebuilt. So yeah, we were fortunate enough to have put some of those things in place where we were flat fee and very transparent with that, but still we were on that journey, and I think all of us got affected by those Royal Commission changes, and had to reassess your commissions front. Even if a client was happily paying 1%, our business had tried to move away from that. But if you're doing corporate super, 1% for a client they could have a 50 grand portfolio or a 500 grand portfolio. So it's very hard to crack open that pricing and reset it all. So that was a real long-term work in progress. And the other thing was, I guess myself and my wife had bought the business with a real keen interest on ethical investment, and some of the legacy clients were very much mainstream and hadn't come aboard with that overlay. So we were busy, I guess, promoting ourselves as an ethical investment practice and working pretty heavily in that area. And then almost retrospectively going back to some of those longer term clients and saying, hey, let's go back and reassess your ethical criteria, and do you want to invest in some funds where we can get some positive impact for you? And a lot of the clients came along for the journey on that front, and some of them didn't change from that mainstream approach and probably never will.
Yeah, yes. I think for us, I'd noticed the same thing particularly when all of the FOFA reforms were happening, that was when I got into a position where I first had a bit more control over service structuring and fees and how to charge and transparency and all those sorts of things. So you could see from my end that when they started introducing, the fee disclosure statements and talking about the commissions and grandfathering and those sorts of things, that we were headed in that direction. But I think it's powerful to be ahead of the curve when it comes to those things, because then when the legislation does eventually change, it means that you can focus on what's next instead of just keeping up. So sounds like you were at it way ahead of us, but I think that is powerful. And I think that, like we were just chatting a little bit offline about some of the recent changes and the flow and impact that they're having, it seems like things are in a good place now. You never say never, and I'm sure that a bunch more things will change, but I feel like the transparency levels are super high now, and basically advisors push that ensure clients are engaged, which is really what we want, I think, as a profession. So hopefully on the up from here. I'm keen though to chat about the ethical investing space. You mentioned that you sort of ended up with some legacy clients in that space, but I know that today that's a really big focus for you. Can you talk us through how that journey came about and I suppose how it progressed over time?
Yeah, I think, we've got an ad that my wife put in a local newspaper, and I think it was the year 2000, just talking about, hey, you can actually invest in super ethically and talk to us to find out more. And it was literally those sorts of little things, being a member of the Responsible Investment Association over the years, and people would just search us out. People would just look us up and say, yes, I don't know much about this area, but tell me about it. So you get this sort of, I guess, steady flow of clients that wanted to learn more. Then what's happened over the years is that more and more super funds have introduced ethical options, and more advisors are familiar with it, and there's more funds literally more investments to choose from, including ETFs that just weren't there 15, 20 years ago. So that's great. There's a lot more options to choose from. But I guess the transition in those sort of clients for us is that a lot of them now come to us and say, look, my super fund has, I tick the box, I've got their ethical option, but I was a bit surprised to find, these mining companies or PepsiCo or McDonald's or, whatever it is that they're not particularly happy about within that ethical option. And the same, sometimes people come to us, look, I sought advice from my advisor, but I feel like, what he or she has recommended isn't quite matching my ethical criteria. So, can you have a look at it? Can we have a conversation about it? So we're finding we're getting people who are maybe a bit further along that journey, that they've had a crack at it and they probably haven't got the ethical overlay or the positive impact that they were looking for. And that's where they search out specialists like ourselves and like other XY advisors, where we're part of the Ethical Advisors Cooperative group. And we certainly, as I say, I'm certified by the Responsible Investment Association. And, so it's part of that overlay, that discussion. And, every conversation with a prospective client these days includes a discussion about their ethical criteria. And I enjoy doing it because it adds to the conversation.
Yeah, I think it's definitely more in sort of the mainstream view these days. Clearly, there's a lot of variation on what ethical is, but I think people are broadly aware of it. And I think talking to clients about ethical investing or socially responsible investing does allow you to build a deeper connection with them, because it necessitates you getting more into their values and what is actually important to them beyond just the dollars and the cents. How did that come about for you guys, though, in the early days? And how did you get into the space, and what did you actually do to build out your offer there?
Yeah, it's a good question. I just remember doing some assignments at uni, and when I did my MBA, I did one on modern slavery or effectively child labour. And it was literally, kids making soccer balls that you buy. These kids are just working, probably 6-7 years old, stitching soccer balls in Pakistan or something like that. It was just amazing. I think myself and wife had both come in with similar stories of saying, yeah, I want to be in the industry, but if I'm going to be recommending investments for people, I really want them to be ethical, up to my standards. And have some positive impact and use it as a force for good. And let's see if we can change some things. And it's probably 20 years after that assignment. And modern slavery, there's more people in modern slavery now than any time in history. So there's actually a lot more work to be done. And I think that's where the positive impact comes in, that whether it's modern slavery or climate change or other issues, business as usual isn't going to get us there. And so we really believe in investment as having the ability to make a difference and make a positive impact. And so literally, when I'm having client conversations in reviews or prospective clients or even the longest term clients that we've got, the markets might be having a terrible time, but you can still have a positive conversation about the sort of impact that is being made in those portfolios. Different companies, the green bond market is just doubling in size each year globally, and you can talk about the impact of all these projects that have been undertaken in these bond funds that have literally got things going on all around the world.
How do you practically weave it into your advice process? What does it look like from a client perspective for you guys?
Well, I think with every client who would do that normal discovery sort of fact find process, including risk profile questions, we just include a bit of a basic ethical questionnaire in that as well, with the ES&G, the environmental, social, and governance questions, and find out the areas of interest for those clients, the areas that they'd like to avoid and the areas that I'd really like to support. I mean, a common one we see, I don't know if it's because we're in West Australia and maybe it's more prevalent over here, but a lot of people coming to us really want to avoid fossil fuels, but they're generally okay with other mining, subject to the ethics of maybe of that mining company and how it's done. And so it's not saying, right, we're not doing anything extractive. I mean, a lot of people are comfortable with areas like lithium mining at the moment for positive impact, and the fact that we're going to need that lithium for this massive demand that's going to be required for battery components. In those conversations, people will point out, different things. I mean, a lot of people are environmentally focused, but occasionally you get someone that says, look, I'm more concerned about the social side of things. And we deal with organisations as well. So some organisations, they'll be looking for social positive impact, and other ones will be environmental positive impact. So we can sort of design those portfolios around those criteria. And yeah, it's a really good way of getting to know a client, is to ask what are the things that they really care about. Someone might say, if I don't mind investing in alcohol, I'm a drinker myself, but tobacco is not a no-go for me. I really don't like the way they advertise, and and someone in my family passed away from smoking, or you'll get into those sort of conversations that are a bit more interesting than, hey, this is what markets have been doing, and this is the market outlook, and these are the different asset classes.
Yeah. And how is your approach to ethical investing advice? How is that, and your offering for your clients, like how has that shifted over time, or what's changed in the years that you've been doing it?
Yeah, it's a good question. It really has been changed from a limited range of fund managers to really quite a wide range of fund managers. Obviously, the platforms that we use play a big part in that. Like we really, over the years, we really had to work with platforms that have got the extended menu options, not just limited menu options. But these days, some of these providers just have a really, really open architecture, and you can use managed funds, ETFs, and direct shares. So what we've done now is set up model portfolio SMAs, and we've got that in-house for ethical investment advisors group, our licensee. But under the ethical advisors funds management, we actually offer that to external advisors as well, just because advisors were coming to us and saying, hey, you guys specialize in this area. I've got a few clients, or maybe a growing set of clients that are interested in this area, but it's not what I do. So they sort of outsourced that portfolio construction bit to us. And it doesn't even have to be the whole portfolio. It might be a core satellite approach or something like that. But what we're doing is we've got an investment committee where we're managing those funds. So yeah, really wide array. We're actually sport for choice. We're actually turning away a lot of ethical investment options these days, on the international shares front and the Aussie shares front most commonly. And that's good. That's a good position to be in. And because then we can build out the portfolio thematically, but also if there's literally two fund managers side by side that are constructed pretty similar portfolios with an ethical screen point of view, so let's say the negative screening's okay, we can actually search out the one that's creating the most positive impact and go for them.
And how do you go about doing that for you? Is it just a matter of doing the research on the funds, or through the actual like BDMs or managers? Like, how do you actually practically tackle it when you're trying to choose what goes into a portfolio that you look after for clients?
Yeah, I think it's a really comprehensive blend of qualitative and quantitative, because you can get that quant info. And I guess I'd say on that quant info, like we ask for the complete stock listing of any fund, the complete listing of fund holdings. And there's still a few fund managers out there that aren't releasing those. And we just say, well, we couldn't use your fund if we can't see exactly what's in there. And it doesn't have to be today's. It can be last month's or whatever. but they've got to have that transparency. Then we've got to get to know the fund manager, because it's about what they're going to put into that fund next week that we want to get a feel for. Otherwise, there's going to be a stock that might pop up in there that we don't like, and we'll get egg on our face because we've invested for a client with certain criteria. We might be going against that. So through our cooperative group, we do some pretty detailed product analysis, and we all share these questionnaires, so we can access that. We get a range of research from Ethos and ISS and Sustainalytics and other groups, and then we overlay that with, I guess, the standard mainstream research that's out there and the input from the BDMs and fund managers. Certainly, a lot of the conversations we have with those fund managers might be things like, "This fund is holding Unilever. Can you explain that? Because we're just not sure." Or even, "Look, this fund's holding Tesla at the moment. Can you explain that? Because they've had some social and governance issues. What's the rationale?" And if the fund manager can't clearly explain, I guess, their knowledge of those social and governance issues and why they think the company's moving past that, then that's a bit of a red flag for us. As I say, this is why we're part of the cooperative group and also part of Ethical Investment Advisors, because Ethical Investment Advisors, we've got a dozen advisors to, I guess, share this work and engage with fund managers as necessary. It's probably a bit too much for our small practice to take on all of that and deliver what we want to clients. So I was going to say, a bit like XY Advisor, it's a bit of the collaborating and sharing and outsourcing for some of that info.
Totally, yeah. It's hard to do it all yourself, especially for any sort of, if you're not a big massive institution, it's does take a considerable amount of time. And I think the ethical piece necessitates you being more involved from an investment selection perspective, but obviously there's a lot of different aspects of your business that also require that attention. James, what's coming up for you? What are you guys focused on now, and what's next?
What we seem to be having a lot of conversations about is the impact investment space. And I guess, we've been talking about this term positive impact, and we try and create that with listed share portfolios and bond portfolios and so on. But also there's this whole area of wholesale investment that really has been available for institutional clients and sophisticated investors. And I guess we're finding that that's starting to be available for retail investors. And so some of these wholesale investments, positive impact, traditionally might have been solar farms or, affordable housing, disability housing, all these different areas that have been hard to access and might have timeframes of up to 10 years before you get liquidity. So what we're finding now is if we can get those into the retail world, we find there is a huge demand for that sort of stuff. People really want to invest in these areas and support these areas. And so it's a funny time in the industry where you've got a demand that is very clear. Excuse me, but the products and I guess the vehicles to deliver that to your average client aren't quite there yet, but we're getting there.
Yeah, it's an interesting space. I think broadly across all investment markets, as we get more scale and more access for investors, the number of choices is increasing. It obviously a good thing overall, you think, for investors, but it also means that there's more things for us to keep our focus on to make sure that we're across all of the things that could be helpful or could add value to those client relationships as well. James, my last question for you, if you could go back and do one thing differently, what would it be?
I think we probably would have gone a bit harder on specialising ethical investment, in the early days. And, as I say, I think looking back on what we're delivering on things like corporate super or smaller clients, we're doing a lot for some pretty low fee revenue, but we were doing it for the greater good and for I guess the larger corporate group. You'd see the corporate as the client rather than the individual, and you'd see up to 10 or 15 clients in a day just sitting out there at a company and helping review their super. So those days are long gone. regulation, compliance, the whole thing has been reworked. But yeah, as I say, if I just love those ethical investment conversations, so I probably would have started having them start specialising a bit sooner if I could have.
Yeah, it's an interesting one. We were just chatting a bit offline about the average cost for advice and how consumers are seeming now, they seem to understand better that it is going to cost you a few grand to get a financial plan when you get there. And I can't help but think it was like some of those, like you say, those corporate super funds where there's some sort of expectation of advice at low or no cost, as well as like with some businesses where there was a focus on models where they're getting payments from sources other than what they're charging, that puts people under the impression that they could, pay less or pay nothing even and still get something. But overall, I think it's definitely a good thing that people know that there's a cost that's attached to it, and the cost is not insignificant, but that allows us to focus more value, more outcomes for clients, more results, and then that sort of self-fulfilling that it then leads more people into getting advice. So
that's right.
Yeah, I think it's all heading things in the right direction. And I think over the years coming up, that with the advisor numbers going down and consumer demand going up, it's there are plenty of things to keep us occupied, that's for sure.
Yeah, I think it's a really weird time in the industry where a client might come to you and say, look, I'd like to invest and ethically and create some positive impact, and you're turning away that client because they don't, it's just not affordable for them. So I'm positive as well. I'm positive that the industry will work through this and we'll have some sort of solutions about low cost advice again for clients, and maybe robo advice is part of that, but it's certainly not there yet. But eventually there'll be some sort of solution that's deliverable. And yeah, it'll only be a good thing because there'll be more people investing ethically, and younger clients as well. So getting younger clients in at a low fee base, but they're just going to build their wealth over time. That's just how it all works.
Yeah, and I think technology is a big part of that. As you say, not quite there yet, but getting closer day by day. So hopefully make our lives a little bit easier sometimes in the not too distant future.
Yeah, that's it.
James, thank you so much for sharing your story. It's great to see you kicking those goals, mate. So I look forward to the next conversation.
No worries, Ben. Thanks a lot for the time.
Cheers, team. We'll catch you next time.